welcome to the extensive weekend video, which is called Gold and Silver Rug Pull. It could have been having copper in its name as well, and we will be of course covering equities, my stock picks, and several leading charts and what's my take on these individual stocks. So much ground to be covering. You know pretty well what I do on my site for clients, and you definitely are subscribed on Telegram and Twitter. Thank you for likes on this video and subscribing to the channel. Your likes help greatly. Let's start with yields, where we had seen them defy hot PPI and move forward somewhat more lower going, thanks to really underwhelming retail sales. That has influence, of course, on rate cut expectations as well. However, the driving force in the latter half of this week had not been tariffs, had not been yields, had not been Powell testimony, Fed policy. It had been the peace push for resolution of the European conflict. That has of course had significant bearing upon US dollar as well, which is continuing slowly probing lower values as befits not just the yields differential but increased optimism regarding the broad European situation, and we see that in Euro springing to life and not just a slow drift of appreciation seen in Japanese yen. The same thing as seen in Euro can be seen in Swiss franc too. Cryptos, they are keeping in there. However, I do see risks mounting for a push lower right next rather than a push higher, because who does not know about Bitcoin strategic reserve? Who does not see Ethereum continued underperformance? Bitcoin strategic reserve is being just studied, and there are lower level than federal initiatives concerning this. So that's not yet a game changer that crypto enthusiasts have been hoping for. Having a look instead of Ethereum at the MicroStrategy, or whatever the name change to strategy, the chart still shows underperformance. So I'm not pinning great hopes on, say, 110,000. I do think that a break below 90,000 would come first for the leading cryptocurrency. And now, referring to the title and what we had seen following the US opening bell, modern counterintuitive development given the retreat in yields and decline in US dollar. Gold miners and gold had been pushed significantly lower. The momentum had been there, and it's been just a slam down, overpowering due interest. I had been looking rather for a sideways to up day rather than a clear down day. So the valid questions to ask would be if yields are really to be continuing lower from here. My answer is not exactly. The path would not be straight down, it would be zigged, and eventually we are going to be returning to rising yields. Is the US dollar definitely embarking on a downtrend? if I return to the dollar chart, we see that it had been reacting to the tariff threats and so on with increasing relative weakness. It had been rising less than what this increase in yields would be suggesting. So that's so much for the dollar path at the moment and the initiatives the new admin is taking. And it of course has a bearing on precious metals, so I have introduced the situation including a rejected breakout for silver out of its long consolidation, that $33 and something area is really a tough nut to crack, so I will be commenting on that for clients in greater detail. We see that rejection as well ruling in copper. However, commodities as such are pushing higher, and for more than a month I had been clearly ascribing that to the turn in agri-foods. These soft commodities are doing way better than crude oil, and base metals are waking up significantly, and that lines up quite well with the turn we are seeing in Chinese markets too. And it's not just about BABA and speculation whether it has DeepSeek or does not have DeepSeek. It's been seeing a meteoric rise of its own, this stock. And crude oil fulfilled my call of not making any sizable distinct progress Friday. So which way are we going at the beginning of the following week? Is the relative outperformance of oil stocks significant enough? What to make of the drying volume? For Friday, my call had been vindicated. It's been the 71-72 area, and the path to drill baby drill won't be that easy. So I will hint at expecting no steep downswing in crude oil to open Monday, as the charts favor a close distinctly above 71 to 72 area. You know, of course, this tweet and how I had been commenting live on SMCI, which had been my leading stock pick. You can review prior weekend's video. You can review the videos before SMCI reported where I had been bullish this stock, and the overall balance of those clues hints at that they are cleaning up the table and preparing the ground for starting afresh in the game of guide lower and beat. And that's where we are exactly seeing them performing already now, and it's been a positive development for Nvidia too. You remember, of course, another bullish pick, UPST, to start the weekend. You can see where it is now, when financials had been consolidating for a while, and apart from the big banks, some other second tier, it's very relative. If you look at the Hood chart, which had been another pick of mine, where these are going. So much for this Friday's heat map, what I make of it, and how I like those sectoral rotations and the middle square, which is finance, teaming with green, which is very, very positive. And you can see that it had not been stealing the spotlight really. And now to those couple of individual stocks to comment on. Tesla, I had been quite confident that we are in the process of carving a local bottom, and subsequent couple of days confirmed the capitulation, feeling like move. And that's the same message from volume Friday. It's just a plain consolidation, and Tesla is trying to consolidate the rebound of the 320s and to keep grinding higher. Of course, this consolidation had been taking a long time, practically since early December. And the next couple of days, whether the 340, 350 area can be defended would foretell about the next path. Apple, those product news that are addressing Chinese market challenges had been well received, and I'm quite liking this chart, and this is lending significant support to Nasdaq as such, so I'm not looking for a deep pullback. You can notice clearly the pattern of making making higher lows, and it would not take too long to see the prior dipstick gap being overcome to the upside. The candle where it opens and how it is going. Stair step climber, very long string of wins, just one intraday consolidation. That's Meta, that's the open source winner, and in this context it makes sense to consider which semis producer had been tasked with supplying the company. Was it Nvidia or was it ARM? There you go, it was ARM. That's why I'm expecting positive surprises from this company down the road. Here you see the bullish pick, SMCI, a little bit of an earnings consolidation, and here we go higher, and justifiably so. This bullish chart, the stock has the worst behind. Nvidia is being taken higher alongside. It's in a weaker position relatively than SMCI if you compare, and still it's basing, and it would base rather in time than with a special precious downswing that would allow for new longs initiation. So consolidation with an upward bias, but you have to be really firing up the weekly charts for Nvidia, because this stock on the daily is not yet out of the woods. ARM building up, basing very bullish, especially if you are patient, you would be rewarded. And this is the daily chart of S&P 500. I'm totally disregarding the bearish looking message of the advanced decline line and advanced decline volume. This has been just a daily consolidation where, from the European perspective of the time zone, this index had closed where it had opened. So that's no showstopper. And on the weekly chart, if you review this very same thing, you see that the bullish flag that I talked last weekend is being resolved to the upside, and here we go. SPY is well over 610. This is the magnet area, and it will continue drifting higher. So much for S&P 500. I will be of course linking to select videos. Thanks again for liking these ones and sharing the message, especially if you find it really helpful for your own decision making. Sectoral view just shows that there is nothing to fear Friday, that it had been just a day of consolidation. Communications, financials, tech, sure, discretionaries, but they had been practically flat, so they are not standing in the way. The inquisitive mind can ask whether the bond market, risk-taking within, junk versus quality, tech versus SPY, whether financials versus utilities, discretionaries versus staples are confirming the risk-on messages or not, what's the progress regarding the week daily breath that we saw Friday, which way is it going to be likely resolved next. My join page will help you select what's right for you based on what and how you trade. Turn on notifications on, whether on Twitter or on YouTube, but of course join my Telegram. Beware of impersonators, you know my trading story very well. Obligatory disclaimer, and have a great weekend.